The reason you don't want to go to a VC is obvious. Your audience might not like it. That mentality is the entrepreneur mentality.
Have a concept and you have no contacts. How do you know who to reach out to?
How do you know your idea is like good for VC financing?
That is gold, dude. This is Mo Better Business. My name is Tahir Jones. I'm here with Gareth Dodden, and our guest today is Rob Smith, and we are charged that Rob is here today. And Rob is a true Renaissance man, really. Started companies, VC-funded companies, exited companies, owned a couple of well-known marketing firms. He's a photographer. He creates content. He's got this amazing background, really brilliant guy and very accomplished. And the reason we brought him here today is because he's got a ton of knowledge about the VC space and about business in general. So pleased to have you here, man. Thanks for joining us, man. We appreciate you coming on. Thank you. First, man, if you don't mind me asking, Rob Smith. Let's talk about your name, your nom de plume, or can you tell us about your name?
My fake name. Yeah, absolutely. So my name is not legally Rob Smith, the most generic name of all time. My name is Rabia Haddad. It's a beautiful name. It actually means the season is spring. I do not go by it as a choice based on database research, and I go with Rob Smith.
Tell me more about this database research. What did that research indicate?
I took photos of food photography, high-end food photography. You tend to target, Michelin chefs, etc. at a city. I was going to London, fairly cosmopolitan city, and I wanted to test. I was going by a combination of Rob just to make the conversation easier if they can't pronounce my name, and my original name, Rabia. And I thought, before I go out to these cities, I usually send out my portfolio. So I literally split my portfolio in half. I put one at the top, the exact same portfolio, no difference in the quality of work inside there, no difference in the price list at the end, still very expensive. But I put Rob Smith on the top one, sent it out to half the restaurants, and I put Rabia Haddad, my legal name, and I sent it out to the other half of the restaurants, just really big and prominent to kind of test it out like an A/B test in marketing. 0 callbacks on Rabia Haddad. No picture, no idea of who I am or what I am. I'm Arab. My background is I'm Arab. Brown, I guess. Tan, some shade that's not white. The name really shows is definitely some weird name, right? And the other one, very generic, Rob Smith. 4 or 5 callbacks out of 30. Wow. That day on, I just made a very simple database decision. I need to provide for my family. I'm going to do what it takes. And I guess my name is going to be Rob Smith from this point onwards.
What made you, I guess I'm just interested, did you always have an inclination that there was this, you're doing this high-end photography business, it's, right, you're doing great work, but you're not, I guess you were hitting you were literally hitting a glass ceiling, right?
More cement than glass. Yeah, but I mean, to some extent, I had my own business. So photography wasn't my key my key source of income, but it allowed me to experiment there a little bit more, try some things out with my name and do some weird stuff over there.
Just to get a sense, I mean, you were a young entrepreneur of the year in the UK, if I'm not mistaken, right?
That's right.
So you've had a lot of success in different areas. That kind of pragmatism, is it something that you were born with? Or was it just a function of, circumstance?
My dad played a big role in it. I saw him go from taxi driver to CEO of a glass company right in front of me. Having seen that as a kid builds in, you can do it. You have the inherent belief built into you then that if you work hard and you do it and you find ways to, honestly game the system and cheat the system and market yourself, right? That's what it is. Changing your name, even small things like that hustle you have a little bit there and doing whatever it takes, you can achieve. And having seen it in front of me, I think was the biggest single factor. But then again, there's certain types of people that are built for this type of stuff. And there are others, I truly believe, that would hate it.
You are not the average guy. You probably operate at a higher level than most people, right? And let's not be too modest here, let's talk about, you know, your experience as a youngster, like what your trajectory
Sure.
was as
Sure.
a student. You know, you
Sure.
weren't an average student,
No.
right? You're not an average person. You were an athlete. There were a lot of things that you did that were not the average path, right? So tell us a little
No.
bit about that.
I was gifted academically. I was gifted athletically as well. So I was good at, you know, I was a big kid, I guess.
Mm-hmm.
And I was pretty good at pretty much everything, you know, academic. I didn't really study that much. I would pay attention and be able to absorb things relatively quickly. Scored, you know, perfect SAT score in math. I got my choice of colleges that I could go to. But that being said, that set me up for some failures, right? I skipped 2 years when I was in high school. So I entered university at like 16, 17. I was just turning 17. I went to a school, I won't name it to discourage any of your viewers, a great school, Ivy League, you know, type, you know, great school.
Mm-hmm.
And I dropped out, right? I couldn't cut it. To be honest, I was number one. Now you're number like 32 at the bottom of the class. It's like I just wasn't in the right mindset to do that. And you know, I went to another university. It also didn't work out. So some struggles, right, early on. And then eventually I went to the Middle East to study at the American University of Beirut. And it was over there that I fit in. I mean, you just need the right place to fit in sometimes. And I did fit in there. They worked around me rather than me working around them. But you don't need to be, I think, the smartest person. I'm definitely not the smartest person in my company, right? I hire people that are smarter than me all the time in certain places, right? I just think that, you know, to be a good entrepreneur and good leader, you got to listen better than everybody else, really understand what people want, what they're really trying to tell you.
What do you think are the skill sets that kind of immediately jump out to you that limit someone from becoming an entrepreneur?
Risk averseness is immediately, if you're not comfortable with risk, and there's nothing wrong with, I always tell people, there is nothing wrong with being uncomfortable with risk. It just makes you a poor entrepreneur. The key concept of entrepreneurship is taking risk, right? Calculated, measured, naturally. Other things that kind of cancel people out from being an entrepreneur, in my opinion, being comfortable with the lack of stability and like we have a runway. It's something called you guys know runway, right? The concept of a runway is terrifying to someone that's lived their entire life working for a big company, right? What do you mean runway? It's like there's no runway at GE, right? Like it's just it keeps going.
Right.
At a startup, there is a runway. There is that other, thing. And the last thing, asking for money. A lot of people are uncomfortable saying, hey, this is what I'm worth, and this is what the company's worth, and this is how much money we need. Those are the types of people that I think would have trouble walking into a VC and saying, hey, give me a couple $1 million to go try something out.
When you talk about the risk stuff, right, I do think that's like almost inherent. Like it's like something, maybe it's you're born with, or maybe it's the first few years of your life, right? But it's like if you don't have some of that gambler in you,
a
little bit of that as an entrepreneur, it's going to be almost impossible for you to go further. But you said with the kind of knowing your worth and asking for money, what you said that more as like a skill. How have you gotten better?
I had some of that innately built in me, but I've seen other people build upon that. Meaning starting off at a place where they had trouble saying, hey, this is how much I'm going to charge you for this, or something along those lines, whether they're a consultant or otherwise, or they're shy to invoice too high of a number, that kind of approach. Getting better with it over time, over repetition, and doing it over and over again. It's something that the first invoice you send to a customer is kind of terrifying. It's like, oh my God, that says the how much on it, and that's what I'm worth. It's like, oh my God, that's scary. To in the future, after repetition and time, some people get better. Some people just kind of are still nervous till now. I know a chief financial officer, interim chief financial officer that bills in a very high, per day amount that still is nervous every time he sends an invoice across. And it's crazy. I mean, to me, I find that insane. It's like, why are you shy? Just send the invoice. What do you care? But other people, I've realized that that's not the thing. The last one I would say, I hate the term. I just find it so cliche, but it's true. Grit. I mean, it's a little bit of that. Things are going to go wrong. I mean, obviously, how you handle it, I've noticed different people have different things, right? If I look at my bank account, and not my personal one, but the company one, and I see that there's like 1 month or 2 months of salaries left, there's two things that could happen. The first time I saw that, it was terrifying. But with repetition and time, a skill set again, I don't panic anymore. I understand what I can do. I understand what I can't do. I know how to communicate to my employees where we are in a way that doesn't terrify them, that brings them on board. That's the other skill set, I think. Whether you're opening a mom and pop shop or opening a VC-backed company, you have to know how to be cool under pressure, and there's no lack of pressure in starting a business.
Yeah. Very true.
What point, under what circumstances should one be considering, starting a VC-backed company? And does it make sense to think about the fact that VC funds are available, coming up with the concept for the sole purpose, right, of obviously whatever that business does ostensibly, but to get funding because it provides the opportunity to actually make this an actual business, right? Are there processes in place? Are there things that you should be considering if you're even, seeking out a venture, in particular in the SaaS space? Potential tech founders is kind of who our audience is, at least right now, right? Yeah. How should they be envisioning that? And are there certain circumstances where they shouldn't be maybe looking at funding? But are there some hard and fast rules that someone could follow or should follow to determine whether they should even be seeking funding and what the mechanics of that funding should look like?
Your audience might not like it. I think VC is the funder of last resort. I mean, if you can avoid taking VC funds, please do that. It is not a fun experience for a variety of reasons. And it's the least. I think VCs exist in a space to fund the businesses that nobody else will fund. It's the crazy. Yes, they can be huge, but it's big or bust, right? It's very little in between. It's not sustainable capital. So the only reasons you go to a VC is you have an idea that could be funded by a VC, and I'll tell you what I think those ideas are. But because the bank won't give you money, right? Or you don't come from money, and you can ask your rich uncle or somebody in your family or your network for money. If you can't do those things, or partner with a lawyer firm or whatever it might be, if you can't go to the bank and you can't go to this, now VCs become a funder to me of last resort, really. The reason you don't want to go to a VC is obvious. They're brutal. I mean, it's not a fun thing to do. It is the least fun part of my job, I would say, by a country mile. And if you're able to survive that, and they have interest in the space, and there's a good opportunity to be had there, and there aren't competitors, and all these things line up perfectly, they write you a check and become the worst type of investor, which is high growth, pushing you to grow, sustainable or unsustainable, doesn't really matter, to get an exit. And they're in it to get out of it. They're not in it like, a family member or somebody else that's in there to support you and see you grow into a sustainable business. Not there like a bank so that you can pay it off nice and slowly. They're in it to make, a 100x return or nothing. And not a lot of people can handle that, and not a lot of businesses are best set up for that type of stress and pressure.
I think that's such an interesting kind of perspective on it, right? Is that like, you're being frank about, look, it's the last choice, but it's a necessary thing. So Absolutely. If you're in that position, how do you make it so that they don't swallow up all of your time? Fundraising is a
full-time job. You will have trouble fundraising and doing your daily duties at that business at the same time, especially in the first initial stages. I can tell you firsthand right now, having wrapping the first a seed our seed investment right now. It took at least 80% of my time. Wow. The way you unlock the ability to do this is with a team. That's why if you have a running business and you're trying to raise money while you're doing that, your team, you're going to have to delegate and you're going to have to trust them. Having the wrong people. That's why I'm always skeptical of sole founders, right? Not because they can't do it. They probably can, right? The problem is you can't do it all the time. You're going to have to do other things, and you're going to have to delegate, your other responsibilities to people. Fundraising is the time where you delegate 80% of your stuff because you're so in it full time. The pitches themselves are exhausting psychologically and mentally, even though it's your 50th, I think I've pitched 75 times during this fundraise, right? The same pitch pretty much the whole way through,
Yeah.
same kind of questions, generally speaking. And then there's the follow-up questions by email, the data room updates, the legal work, the setting up of the all that fun stuff that comes alongside it. I don't think you can do it and continue at the same pace. That's why you want to shorten it as much as possible, make it as quick of a fundraise as possible, even if you're taking a slightly less perfect deal, if you will. Just shorten that time so you can get back to building your product or selling your company or doing whatever it is that you're doing.
That's interesting. I've been at a bunch of companies that were, doing things like we were working on web redesigns because they were looking at going public, IPO. I've always noticed that the C-suite, literally half the quarter was spent preparing to talk to the board, report to the board. And then, we're doing board slides that, like you mentioned, drew resources from every team in the company. And it seemed like really fully half to 60% of their jobs dealt with something in association with the board or whoever had funded them. And I'm wondering if at any point that goes away or if that's just a necessary part of what you're getting into when you take on capital in that way.
No, you're in it. Meaning the board isn't disappearing at all. If anything, they become more powerful as well. It can go either way. If you continuously hit on your metrics and continuous growth, you'll notice a board just in general will bother you less, maybe a little bit, trust you a little bit more is another way to look at it. But if there's some shakiness, we've gone through some ups and downs, which is very normal. They're going to be, more demanding. You're going to spend, regardless of whether you're doing well or not, you need those board slides, you need to present. It's incredibly time consuming. But that's kind of the contract that you signed. You're taking money. These people want some oversight to make sure that they have some guidance and they can guide the company directionally in the right way. But again, it's the quality of the board, not so much that one exists and you have to prepare board slides. It's the board asking the right types of questions? Is it leading the company in the right direction or not? I would say, in my experience, having dealt with a lot of boards, both my own and other people's, boards can sink or swim a company just as much as the C-suite can, right? Sending them on wild goose chases sometimes, not really listening or paying attention to what's going on and just making these statements or being non-involved, right? Like you want a board, the reason you put together a board is to help steer the company and also open doors when needed, lead projects if necessary. The worst thing to me is, like, from a board perspective, is a board that either hurts the company by negatively, taking in the wrong direction, or is just absent, right? And not providing the oversight that the C-suite kind of needs sometimes, and correcting or saying, hey, did you guys pay attention to this? Because this is something we're seeing in the marketplace, et cetera. Things that you might not notice because you're so in your company, you can't take that step back that the board member is able to do, and provide that guidance. And also you're generally have some very experienced people on the board. You want them to be sharing their experiences and helping guide the company in general. Taking a CEO and telling them, a C-suite and telling them, hey, once a quarter, you got to put your ideas on paper. I think that's a good exercise just in general, whether it's for a board or for themselves. Validate what you're doing to somebody else other than yourself. The quality of the board determines, if that's a waste of time or not.
Let's assume you're already an operating business. Probably have people you want to be on your board already, I'm assuming. What is that give and take like as far as how they populate your board and how much influence do you have over who's on your board and how good the people are, like you mentioned?
When you're taking on new investment, those investors will most likely be the board members. Someone gives you a seed investment or a Series A investment, they'll ask for a board seat that they'll either put one of their members on or assign somebody to it, but they generally control that board seat or who gets assigned to that. As the rounds evolve, they'll continue asking for board seats. And then what will happen is you'll eventually get a professional board to get in there when you do something like an IPO. IPO means the investors themselves may retain a board seat or not. It depends. But now you're hiring people to be professional, quote unquote, board members. They do nothing but just be a board member. They're not necessarily investors.
What's the upside for the board member, in a best case scenario for a board member of one of these companies?
Board members usually have stock options to some extent. Now, if they're an investor, that's not usually the case. They're investors, so therefore they they have lots of stock in the company, or they have the option to buy a lot of stock if it's a safe note, etc. The idea being they get to control the destiny of their investment to some extent. That's really what they're getting out of it. In the future, if you're hiring professional board members, they're getting a salary of some sort, whether that's a stipend, but this is a pretty big one usually, to attend these stock options, so that they're vested in what they're, they have some skin in the game, quote unquote. Mm-hmm. They really care about the decisions that they're making and the way that they're shaping this. It's usually financial incentives.
What would you say with your, I guess, when you're looking at these, whether it's the VCs or people on the board, mm-hmm. you had to kind of distill it down to one or two things besides the money, obviously. What is it that you're hoping that they bring to the table?
If you do have like a few people interested, which is the ideal case, it really validates your idea. But now you're looking for, honestly, who can help you the most. That's always the way I like to look at it. It's not necessarily whose portfolio is better. They might have a portfolio of companies they've worked with or invested in the past. Their level of involvement in those companies may be very little, right? They might have a great portfolio, but they really didn't do very much over there. They kind of co-invested with other people, never took an active role over there, or they invest in tons of things and really don't have time to really dive in on each one of these. You want someone that is available and can be involved, and B, has the track record in your specific space, right? Just because a company invested in I don't know, I don't want to say any specific company and ruin anybody's day. Microsoft, and you're building a little app to do X, Y, Z. Well, that might not be relevant, or you're building a B2B, kind of solution for, databases that has nothing to do with that early investment in Microsoft that made them more Facebook or whatever it was. That might not be relevant experience that you're looking for. Additionally, in these large VCs, you have dozens of people that work there. You want to know who you're going to be working with over there, who's going to lead this particular investment. They're the ones that are going to be most involved. It's who on that team is going to be working with you, and do they have the time to really invest to really help you in what you need help with. And there's, again, two models there. There's the investor, which just invests, sits on a board, might take some, and then there's the investor operator, which is becoming much more popular, which is they not only invest, but they actually take a very active role in helping you plan product, launch product. They're an ear to, you call them much more frequently. In the case of my current lead investor, text quite frequently. It's very back and forth, much more communicative, and that's what we were looking for in this particular investment.
As a VC-backed company, are there instances in which you could have personal financial liability for a company not succeeding? To me, if you're somebody who's opening a donut shop, right, or mom and pop shop, usually there's this tie between their personal funds and their business funds, right? You mentioned, if you're going to ask family for money for your business, right, uncle whoever or aunt whoever is still like, I loaned you money, right? I didn't loan you business, right? So my perception is with VC funds, mm-hmm, there's risk, but they're incurring the majority of the risk. And I'm wondering if that assumption is correct. Like, I'm assuming this is money where you take your shot, you work as hard as you can, you succeed or you don't succeed. And if it doesn't work out, you don't end up owing tons of money.
No, absolutely. If you're taking money from a VC, you are not liable, quote unquote, for that money in all the cases I'm familiar with. You're going to open a Delaware C Corp generically. You're, be an officer in that company. You're going to hold a lot of stock for that company, and they're going to invest into that company. And to be honest, the majority of their investments fail. So they're very familiar with how that works. It'll be dissolved. They'll get their money out first, because preferred shares and whatnot. No, you're not going to be under any financial liability in most cases, unless you're negligent, unless you were, you did something wrong or you embezzled money, which is rare. But I mean, in these edge cases, yes, you would be technically personally liable for that. But in most cases, no, they're taking the majority of the financial risk. Now, that being said, that's a bad way to look at it. The reason being, if you're working as a CEO, like I will be at my new company, I'm taking a 75% pay cut to go work there. So there's something called opportunity. Like I'm giving up something. I've already invested also, time, energy, effort, my relationships, all that stuff into it. So I think it's a poor way to look at it to say they're taking all the financial liability. It's not true. They're taking, they're putting the actual capital in most of the cases, yes. but you're putting in things that are just as valuable as capital, opportunity, loss, you should understand what you're bringing to the table too, because coming in it with, they're taking all the risk. That's not true. They are putting on all the money, but they're not taking all the risk, right? You are taking a significant amount of that risk. You're taking a lot of shares for the company. You're coming up with the idea. You're putting your time, your energy, you're building your relationships. You should still care just as much. You're losing a lot every day that you're working there. If you don't, right? You can get a job somewhere else that pays much more steady, that probably pays higher than what you're getting. And it's, more prestigious to get an office and a nice chair, right? All that stuff, if that's what you care about, right?
Right.
401k, all that stuff you might not be able to afford with a small startup.
Right.
That's the kind of stuff that you need to understand you're bringing to the table, and you're taking risks too. Because if you don't have skin in the game and taking a risk, a really good one, you're probably going to fail. That's why second round entrepreneurs are generally not successful. I mean, there are exceptions. Elon Musk, obviously, there's a few. But
they know what to expect, type of thing. Like
they know what to expect, but they're not hungry anymore, right? You take the hunger out. People don't work as hard all the time. You have to be built the right way to say, I have the money. I still want to succeed. I still want to prove people wrong. I still have that chip, a little MJ. Still got that chip on my shoulder. I want to prove something to somebody, even though you don't have to. That mentality is the entrepreneur mentality. Absolutely. Like, everyone's out to get you. You're going to prove everybody wrong. You have to have that mentality. Otherwise, it's tough.
You mentioned kind of skin in the game. How do you get, so obviously from the VC side, they have their funding. From the founder side, you have your, reputation, your opportunity cost. How do you get, I guess, that core team, besides just options or equity, how do you really get them to have the skin in the game?
You got to have the right people. The wrong people, no matter how much whatever you do, it's not going to get them on board, right? But then B, your first pitch, is to your own team, right? Get them on board, get them fired up, get them excited. In some cases, you have enough money to pay them something, but it's probably less than they can earn elsewhere. That's their skin in the game. Sometimes they're bringing in some knowledge that you don't have or is rare. That's their skin in the game. That's fine, because they can take that knowledge elsewhere, right? But you have to do two things, I think, to get people on board, quote unquote. You have to explain to them why they're important, because if they're just a cog in a giant machine, I don't think people get fired up and they don't make sacrifices, right? They're not going to sacrifice for you.
Or take their weekends.
Right, like they're not going to do that extra. They're not going to go that extra mile. You have to explain to them why they're so freaking important to this, and without them, everybody's replaceable. I always tell them this: everybody's replaceable, including myself, right? But it's how hard is it to replace this person? You got to let them understand that they are incredibly hard to replace. They have unique stuff, and you really choose to work with each other. It's a choice. I always tell my team the same thing. We don't have to work with each other, right? We're very talented, gifted people. We can go work anywhere we want. We choose to work with each other because we like each other. We understand each other. We trust each other. Hey, this is what I'm going to do. I'm going to go out. We're going to try to raise some money. And if this works, this is what's going to happen. And they are part of that founding team, right? They're part of that team that you're going to build around. So help them understand what their future position is going to be like, what we're building towards. You really got to sell them on that dream, even more than a VC. VCs are usually more experienced at looking at the long-term picture, because that's what they're there for, right? The few years building, growing. People don't see the businesses growing that way if you're not an entrepreneur. This is your first time doing it. You have to really explain that to them, walk them through it, and explain where we're trying to get to, not where we are today. Because where we are today is usually a gloomy place, right? We don't have the product, we're building it right now, no customers, no money in the bank account. If they get distracted by today, then you'll never build that future. Every company starts at that ground floor. You just got to explain to them that it's a good place to be at, not a terrible place to be at, which it might appear to be to most people.
Let's talk about the upside, right? Let's look at a scenario in which, you and your team are obviously people who fit the mold that you talked about, right? You don't need to even try to be an entrepreneur if you're risk averse, if you need routine, if you have to have things operate in a certain way, on a certain schedule, what have you.
Absolutely.
So let's say you fit the bill, right? And first of all, I guess, how do you know if your idea is good or whether your idea is even worth pursuing for funding? But what is the upside of funding, right? There's a reason why you put yourself through this misery, right? What are the potential upsides of you going through this process?
How do you know your idea is good for VC financing? Is it high growth is the key thing, right? Like, is this a flower shop? It's probably not going to be high growth, right? Bicycle repair shop, not going to be high growth. Usually it's tech enabled, usually health or tech enabled or fintech, something in that space. And it's basically where investors are, right? Investors are investing in those spaces right now, or high-end science, obviously. You have to have the right idea. So if you have the right idea and you've gone after the financing, really, am I a glutton for punishment? A little bit, right? It's the competitive athletic spirit in me. I want to go raise money during COVID because I thought, I can do it, right? And it was hard. And at times I was like, am I crazy? But yeah, you have to have a little bit of, you like the challenge. Otherwise you're just not going to do it. And then the second thing is, if you get the money, right? You got the money. What can you expect? The VCs are going to have tons of expectations. You've got to hit these milestones. You've got to go after this, and that's got to be something that motivates you, not depresses you. Because there's two ways you can react to that, right? Like, oh my God, this is terrible. 99% of the population will react that way. And if you're in the 1% that says, game on, right? Like, let's do this, right? Like, that's the kind of person you are. You're going to be a good entrepreneur. Now, what can you get out of this VC funding is more VC funding. So later stage VCs, BC rounds, generally only invest if you've had an A and C. So the seed round leads you to an A leads you to a B, so forth and so on, and then IPO or wherever you go, an exit of some sort. So you're on that trajectory. You've started the path to get to more fun, to go back out, raise more money, get an infinite loop basically for the next, 5 to 10 years of your life. What are you in for? The chance to take your destiny by the horns and create wealth where none existed for yourself personally. But if that's the only thing you're in it for, I always tell people, go into banking, go into Wall Street, I don't know, go into something a little bit more stable. You're almost guaranteed to make that money, become a doctor, whatever it's going to be. If you really want to do this, you got to want to, in my opinion, in some small way, change the world. I don't know what that means for everybody because every business is a little different. But VC-backed companies, if you look at them, look through them, some of them are changing them in a goofy way. Some, Instagram changed the world, right?
Everybody's trying to change the world.
Absolutely. Even B2B companies that are building tech, they're changing the world for some group of people, right? They're changing the way businesses look at money. You have to want to do that, right? You have to be excited by the potential of you're going to make an impact on the world, not just the money, right? Because the money, I believe, can be made in easier ways. Honestly, if you want my honest opinion, I think there's easier ways to make that amount. I mean, maybe not that astronomical sum, but to be very comfortable very easily. But if you want to change the world and you like the challenge of, building your own personal wealth from nothing, right? Like building it from right now you're starting with just 4 people in a room with debt and, all this, and take that to, an IPO, which is crazy if you think about that, the journey of that group all the way to there. That's got to be exciting to you, like the growth and then the impact on people's lives in one way, shape, or form, businesses' lives or people's lives, B2C, B2B, depending on what you're doing. You have to be excited by those two things. I think that's a limiting factor to not who goes into, entrepreneurship, but who's successful in it.
What's the flip side of that though, right? You need all these traits that are extreme, right? What are the potential pitfalls of somebody who's carrying all those traits? What do you have to look out for if you're that person? How do you maintain balance?
You don't. Now, I say this you can ask my loved ones that are around me. They got to work a little bit around me, not the other way around. And I'm open with that with them. And I tell them my life is crazy, right? You got to find people that are equally crazy as you so that I don't have any kids, for example, right? I've made that kind of like a decision because I don't think kids in this lifestyle are a particularly good combination, right? You make sacrifices is basically the way it works. There is no, if you're asking about work-life balance, I'm sorry, that's how I understood it. Throw that out the window because that's unlikely. If you're going to start your own business, it's just honest. You're going to make sacrifices. I've made sacrifices my entire life. I wouldn't have done it any other way, right? Like if you take me back, I'm going to do the exact same things all over again, right? Like business has to come first, not first in the sense of, it's the most important thing in my life. It's not. But priority wise, it needs my attention first, right?
Yeah, your time, commitment.
Yeah.
How do you know if the right idea is potentially the right idea?
To me, that's the easiest answer ever. We had a bunch of bad ideas. I've had tons of bad ideas. I love my bad ideas. And I just take my ego out of it, right? I just share my idea with people. Really allow the other person to not be mesmerized by what I'm saying, right? Don't pitch them. just tell them, right? Like just say, hey, what do you think about something like this? What do you ask people that are been critical with you in the past. And if you have really good friends and really smart friends and people that they'll tell you this is stupid. And I've been told my ideas were stupid plenty of times. And once you get to a good one, it's when everyone goes, wow, oh, that might work, that might work, that might work. And then you go to a VC or a funder and you ask for money, and that's when you really know it'll work. That is your maximum validation that you do have a good idea. You have to make sure that there's a market for this. There's a good addressable market, a TAM, right? That's big, and you can get a good chunk of it. And if you're like us, we're building a first of its breed. So think of it like Uber instead of Lyft, right? Lyft came after Uber, so they were able to say, hey, we're like Uber, but pink. Yeah. Uber had to go out and say, this is like something completely different. It's like taxis that use your phone to go, right? They had to explain the whole idea.
In those 6 months, right, I work with quite a few founders because in agency work, something I notice is that a lot of founders are very private or wary of kind of sharing their idea with other people, right?
Yeah.
And I agree. I think it's stupid, right? There's always the rare horror case of somebody taking your idea and, et cetera, running with it. But most of the time, that's not the case. Are you at all precious with your ideas when you're kind of getting from, or validating? Not at all?
Not in the slightest way. And I think anyone who is missing a fundamental like building block of entrepreneurship is you have to bring something unique to the table. It can't be, so it's called the right to win, right? Why do we have the right to win versus anybody else out there? We have to either the team or my experience or a special connection I have, that gets me better pricing, whatever it is, it has to be something unique to me. So I can tell you the ideas are a dime a dozen to some extent, right? My ability to execute should be something that I think is superior to others. So therefore I shouldn't be hiding this, but B, I should bring something intrinsic that is unique to me and my team that I think that even if you had the idea, you couldn't put it together the way that we would, right? And if you're worried about sharing your idea, it depends at which stage. Naturally, there are reasons to share it from an IP perspective. Yes, there are some cases there. But for the vast majority of startups, like I don't ever explain to people how I do something. I explain what I'm doing, though, to everybody, right? The only reason I'm not sharing my current startup is we're in stealth mode. We haven't launched yet, and we haven't announced the round. That's all. It's just a PR issue, but I'm not going to do it within the next month. But no, if you're worried about someone stealing, quote unquote, your idea, because I hear that a lot too. I don't know if that's what you're talking about, right?
Yeah, first time founders kind of they have that
usually first time. That's so true. Yeah. Any lawyer will also tell you. I mean, there are reasons not to share everything. Obviously, how you do something. But if you're worried about telling people what you do, the website's going to go up at very, shortly after. If you're worried about the 2 weeks before that, someone finding out about what you're doing and being able to copy you, you probably don't have that great of an idea. And I mean that like not in a bad way. It's just, it's probably not unique enough for VC fund.
I like how you put that up. You tell people what you do, not how you do it.
Do you make your own decks? Is it a team effort? Like what do you have it down to a science?
There's a formula to fundraising deck in general. There's the Lyft and the Uber for lack of, we're using that analogy. If you're explaining something really new and different, you have, you can make it a little longer because you need to explain a little bit what you're doing. But generally there is a formula to it. It's not a hidden formula. You can find this online. There's many variations of it, but you're generally going to do the traditional, this is the problem, this is the opportunity, this is my solution. The typical kind of flow. The team, you have a financial slide, you're going to have an ask slide at the end, this is what we're looking to raise or whatever it's going to be. The formula doesn't make a good slide, though, a slide deck. A formula just tells you the order of how you should, organize your thoughts. I think a good slide deck, a well thought through, I invest all your time and energy into slide deck. Is the first thing investors are going to ask for is send me the deck and we'll see if it's even worth our time. That's the one thing you get to pitch. So just send it across. I usually like to send a little bit of an explanation to guide them through it a little bit. And I always tell them, this deck doesn't do what we've done justice. Let us show it to you firsthand, because it's true for most cases. The deck is hard to transfer a whole idea there. You really want 30 to 60 minutes and talk to the person. The deck's job is to get you that 30 to 60 minutes. So it's got to be really good. And I would say the leader of like a CEO or the main founder, if you will, if it's a group, it's different, but should put together the framework for the deck, but the team should help build those out to some extent, right? The leaders got to kind of guide the whole deck through because it's their usual main idea, and they're trying to guide this, and they're the ones mostly going to be pitching. But the rest of the team has to be involved. I mean, it's just too big of a project. We spent months iterating on decks, A/B testing different decks, what people respond to, what people don't, trying things out, listening to the people while we're pitching. Listening and watching, right? If they're not paying attention, we want to know which slides were the ones they weren't paying attention to, and swap those out with something else that's a little bit more interesting or visual.
Wow, that's obviously a lot of preparation before you even reach out to.
We're on version 30 something with our deck right now, so yeah, it's gone through quite a few iterations.
If you're someone who doesn't have any contacts, like you have been through this process before, right? So I would imagine, if you have a concept, you know who to call, right? But if you have a concept and you have no contacts, but obviously you can do your due diligence, right? But how do you know who to reach out to? Is the VC funding space one in which someone who is not in it at all can reach out to someone because their idea and their presentation is good and get a meeting?
Hell yeah. You have to find ways to attract these people to come talk to you, right? And that people think cold email. That's the first thing they think. That's the way to do it. Send out an email and can I get a meeting? And if they don't answer, it wasn't good. Too lazy, right? If you're going to send an email, I'm a marketer. You got to send a campaign, right? Step 1, step 2, step 3. These are the changes. Maybe the first one didn't interest them. Now we got a lead investor. So I sent it back out, and now everybody's interested. All of a sudden, we got a lead investor, right? It's the continued flow. It's more of a newsletter than it is an email. I think you got to think of it that way, right? A newsletter, an investor newsletter that you're sending out. So that's one thing. The second thing is you got to hack it. I mean, you got to hustle a little bit. You can't just send out an email and say done, right? That's a very lazy approach. The way we landed, I'll openly say it, the way we landed our current lead investor is we had no connections to them. We had a beta for our product out there, and we just built a lot of hype around the beta. Like, it was a really cool beta. It was going, doing its rounds. A lot of people are using it. Out of the blue, they contacted us and said, we've been hearing about this. The managing partner over there, the head of the firm, and he's like, can I get an invite? Of course you can. So we got him a beta invite. That beta invite, the next day he asked for another person. Within 2 weeks, we had the whole company on our beta using our software to do their stuff. And that's how you got the meeting, right? And our meeting, when we hosted it, was on our platform, which is super cool. It's not just a hit and run kind of, like one email blast, and we're going to blast the generic email. You got to handwrite some of this stuff. You got to reach out, talk why it's relevant to them, look at their past investments, research which partner you're going to talk to. Just reaching out like those blasts, those never work. I can guarantee you that's not going to work. Reaching out very specifically, and then using, another cliche word I hate, network effect to infiltrate, right? You get no's. You're going to get so many no's, and you got to be very comfortable with that, right? Like, no, so what? I'm going to prove you wrong is the first thing I say. I'm going to make you regret that. Since you said no, I can still get something out of you. Let's connect on LinkedIn, and then I'm going to see who you're connected to, and I'm going to ask you to help me connect to all these things. And you said you didn't invest because this is, some issue that you didn't like. Well, all these guys don't have that issue. Can you connect me to all those people and have them put their, and be unabashful? Why are you being shy? Just go and ask for what you want. These are investors. They're not shy either. You have to be the same way. You got to be very, very confident with what you're bringing to the table.
Amazing. So it's like your salesmanship, all these things that make for good salespeople. Follow up. No is just the beginning, right? And the long game you mentioned. These are all traits of great salespeople, and people kind of repelled by sales a lot. But I feel like it's integral, right? There's no business being done until the sale is executed, right? So
yeah, bad sales is repulsive, to be honest with you. Like, when you get those generic newsletter type emails, I don't respond to those. I don't expect other people to respond to them either. So I sit there and I handcraft those emails that go out. I research that person front and back. I see which school they went to. If there's an overlap, I'm going to mention it. If there's something, I'm going to make this person feel and know that I wrote this by hand and it really means something to me. These investors get hit with hundreds of those. If you don't understand how to write a an email outreach with a good subject line and use all the data, on your side, keep track. I sent it this day, 3 days later, I have to remind you to send that, right? You got to have that kind of discipline. Discipline to do it. Absolutely. And leverage your team. If you have a team, put them to work. I mean, that you need help, so just don't be afraid to ask your team to help you out. And I have a team member that helps me mostly with the drafting and sending of those emails.
There are tons of acronyms in the VC space. You mentioned TAM, total addressable market, CAC, customer acquisition cost, lifetime value of customers.
Yep.
What are some of these key acronyms that one needs to learn to even demonstrate that you are looking at the right data and able to offer data that's going to be useful to a VC who's potentially looking to fund you? How are they making the decision? What are the acronyms people need to know, and where can they learn more about this?
It's hard to give one comprehensive list that covers all of them, because every industry has certain key metrics or acronyms or ways of lingo, if you will, that's unique, right? The health, I've dealt in a lot of spaces. I have the unique luck to have worked in so many different spaces, right? Health has its own set of metrics and variables that are so different than consumer goods. That are so different than fintech, that are so, every space is so different. But obviously the ones you mentioned are universal: CAC, LTV. Most of these you can find. I mean, you don't need to know them all, is the one thing I'd say. It doesn't really matter. If you have a good business, I know lots of people that don't know how, any of these, never went to business. I never went to business school, right? Never went to business school, don't know these things. You don't need to. You need to know your business. You need to know the acronyms that are important to your business, right? The ones that are the key things there of how you're going to make money, how revenue stuff, related stuff, how you're going to acquire customers. That's CAC. But I mean, you can call it whatever you want. I've seen it, cost per dollar, right? Dollar of revenue, how much cost it. That's another way of doing CAC over LTV, LTV over CAC. It doesn't really matter. All I would say is never look like you don't know in front of an investor. Try to play it cool. Google. I've done it before. I'm not shy or bashful, right? Like, what is that word? I've never heard that before, right? Like, let me look. Oh yeah, of course. And you look it up, and then you quickly try to calibrate. Also, don't be shy if you really get stuck. I really don't know. Please explain to me what the hell you were telling me about, because on the next one, I really do need to understand. And the other thing is just listen really well. I think entrepreneurs can get caught up in pitching, but they don't understand the last 10 minutes of that pitch is really about listening really, really well and understanding this person said yes, but they really mean no. Or this person said no, but because you didn't explain this, you might have a shot if you come back with X, Y, or Z. Read between the lines, because investors have their lingo, right? We'll evaluate this really means we're not going to really look at this too much. If they say, what's your timeline? That means they're excited, right? Because they're worried about getting cut up. You have to really kind of understand the, not lingo like acronyms. I wouldn't say that is a major issue, but the lingo, like what people mean when they say something, right? You can learn it the long way, which is go to, a couple dozen pitches, and you'll understand, oh, when they said that, they actually were telling me to, buzz off. And when they said this, they're really interested.
That is gold, dude.
Just dumping information out at you as well.
Man, it's the best. I mean, Gareth, you have anything else? Anything we need to know?
No, I think that covers so much of what we were, we've been talking about for a while, but I feel like we got someone who has gone through VC process. You touched so many different industries. So yeah, thank you for, taking the time.
Guys, this was kick-ass. Thank you guys. Anytime you need anything, I look forward to launching soon and having you guys on our platform sooner rather than later. Then you can see what I was kind of hinting at a little bit here and get that up there.
Man, we'll be there, man.
Oh yeah.
Thanks for your time, Rob.
Let me know if you need anything from me. Absolutely, man. Absolutely.
Thanks so much, man. For the best in Black business, hit up mobb.co, mob.co. Do it now.